Hello, traders. Gary Wagner here. It is approximately 11 a.m. in Honolulu, 5 o'clock in New York, Thursday, the 12th day of July, 2012, and this is the daily report for gold and silver. Mixed bag currently in gold and silver, and it seems that silver today is being supportive or propping up gold. We currently have gold off on the day, but well off of the lows, trading down about $495 on the day. As you can see, 1571.90. We're looking at short-term 60-minute charts. Silver, well off of its highs. High today of 27.50, currently trading 27.31, and that's trading 7 cents higher on the day. In what is being characterized as a mild risk-off day, we do see gold, although well off of the lows, trading lower on the day. As I said, down about $5. We'll start out with the short-term charts. This is a 60-minute Henkin chart. And what you can see, we talked yesterday, you could see that the market did have a nice little rally after this decline. This is when it touched roughly just above 1600, this being 1605. You can see these highs. I believe it was around 1603. The market trades off aggressively. And in terms of the low, you can see right at around, call it just below 1565. Trades sideways for a little while and then trades to a new low, this low being around 55. This happened last night. Market was trading off anywhere between $10 and $13 lower. However, on the bullish side of the fence, what I am noticing is this. When we look at this most recent low, and this low is just above 1545, you can see that when it did come down on this occasion, our low now is 1555, so we did get a higher low. The other thing that I believe is noteworthy before we move on to our next chart is when we look at our moving average convergence divergence, you can see that we've clearly gotten the beginning right in here of a cross. Traders, we are looking at a weekly chart, continuous contract, COMEX Gold, straight candlestick format, and it has a couple of Fibonacci retracement sequences. I've got an extremely long sequence, which begins, of course, 2008, covers this entire rally, and a smaller one starting just below 1200. What we are looking for in this is simply called Fibonacci harmonics. We get two of them, 1467, 1469, and then 1646, 1645. So these are really, to me, the two areas that I believe that gold, while it is range bound, will trade in. Now, currently, we have it above the 50% retracement mark, 1556, and this, of course, is based upon the shorter of the two retracements. Now, when I originally put on the trade, I used technical indicators, shorter-term Henkin Ashi, but I was also under the belief or the assumption that what we were witnessing in the marketplace was really sell on rumor, buy on fact. We saw the marketplace really go down before the release of the FOMC meeting, and it was my belief that we would probably see some firming in the market following that. I can't say that we have seen that. The market has remained flat. We have been under a little bit of pressure, not a lot, but it has remained flat. In terms of a upside goal in the market, if it continues to trade within the range, I will simply look to see if the market can generate enough upside move to get over 1600, to look for it to stall somewhere before 1645. You know, as precious metals traders, it has been hard to get excited about too much recently. We've seen this market not only going into what is being termed as the summer doldrums, but an extreme amount of pressure to the downside. So I can tell you, it is very nice to see this market, and I'm talking about silver now, actually show some real resilience. We're looking at a short-term 60-minute chart, Henkin Ashi format. I'm going to move it into candlestick format, but you can see this really nice move that we had 26.40 here. This is our low, and you can see that it's gone up almost $1, 27.18, and it's done that in the period of 1 day. But traders, when we remove the Henkin Ashi component, meaning we're looking at straight candlestick, it's really not so much a 1 day move as a 1 hour move. You can see that move really in this candle right here as the market is above 26.60, but you can see it rising from about 26.70 and taking it well above 27. In fact, in terms of an intraday high, about 27.30. 60-minute chart, it's back on the move to the upside after consolidating for a good couple of hours. Interesting market right now. Silver does have some potential. It seems as though investors are seriously looking at silver, and especially with the pressure of gold, it makes some sense. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review, the weekly review. Bye-bye.